In 2022, a nation of just 5.4 million people collected over $140 billion in corporate taxes, roughly 20 times more per capita than the United States. That is not a rounding error. That is Norway. Norway sits at the edge of northern Europe with a population smaller than the city of Singapore. For most of its history, it was one of the poorer nations in Scandinavia, dependent on fishing and timber. Then came 1969. In 1969, geologists struck oil at the Ekofisk field beneath the North Sea, one of the largest oil discoveries of the 20th century. Almost overnight, Norway was sitting on hundreds of billions of dollars worth of hydrocarbons. The question was, what do you do with it? Norway's answer was radical. The government imposed a special petroleum tax on top of the standard 22% corporate rate, bringing total taxation on oil profits to 78% as of 2023. Every private company extracting Norwegian oil paid nearly $4 out of every $5 in profits back to the state. And the government retained majority ownership of Equinor, its national oil company, ensuring a direct share of every barrel. In 1990, Norway created the Government Pension Fund Global, a sovereign wealth fund designed to transform finite oil reserves into permanent national wealth. By 2023, the fund held assets exceeding $1.4 trillion, making it the largest sovereign wealth fund on Earth. It owns stakes in over 9,000 companies across 70 countries. The Norwegian government spends only the fund's expected real return, roughly 3% per year, leaving the principal untouched for future generations. That discipline funds a sweeping social contract, universal healthcare with no out-of-pocket premiums, tuition-free university education, and parental leave programs paying up to 100% of salary for 49 weeks as of 2023. In 2022, the United States collected approximately $425 billion in corporate taxes, roughly $1,288 per person. Norway's petroleum sector alone generated the equivalent of over $25,000 per citizen in the same year. The result is a Gini coefficient, a measure of inequality, that ranked among the lowest in the OECD as of 2022. Norway's model required a rare combination: a major natural resource discovery, political will to tax it aggressively, and the institutional discipline never to spend the principal. It is not easily replicated, but the underlying logic is universal. A government that treats corporate tax revenue as a public inheritance, not a political prize, can transform an economy for generations.